Hi, welcome back, folks. So, our next speaker is Satya, who is author, subject matter expert in finance. Thank you, Satya, joining us in India BizApps Back to School Bootcamp 2021. How are you, Satya?
Rakesh. I'm good, thanks. Can you hear me, Rakesh?
Yeah, I can hear you now. I can hear you now.
Good.
Yeah,
So sound quality is good, sound, video, everything is fine.
perfect, perfect, Satya.
Okay, thank you very much, Rakesh. And I'm waiting for Anand. How the session's going so far?
Awesome. It was good. Yesterday we had a lot of learnings. Key topic. I think today also a couple of sessions are planned, and we are eagerly waiting for your session. I know I have gone through your book, but I think many folks, those who are new to this ERP and trying to leverage your sessions, and couple of folks, and they connected with me last week saying that they're trying to learn what you are achieve in that book, right? Because you just try to simplify your approach, isn't it, so Satya?
Rakesh, Anand has joined. Can
Okay.
you make him presenter or like he should be able to unmute?
Yeah, I'll do that. Yeah, just give me 2 minutes. I'll make him present. Okay, there you go.
Very much.
Thank you,
Yeah.
Anand.
Yeah, hi everyone.
Hi, thank you.
Yeah. Yeah. Let me share my screen from here. You can see my screen, Rakesh.
Yes,
Okay, I'll just minimize this window. Okay. So we are good to go then, Rakesh?
yes, Satya.
Okay, thank you very much. Hi, everyone. Welcome to the session, Stick to the Basics, Microsoft D365 ERP. And special thanks to Mr. Rakesh for giving us this opportunity to talk about this topic. And we will also take this opportunity to talk about the book we have just authored 2 months back. So many of the topics of the content today we are going to talk about is from our book. These are basically some excerpt from our book, and we thought to share uh, some nuggets from the book so people can understand what is in the book. And it's not only about the book. This is about the basics of finance, accounting. Even if you don't go through the book, you can still learn a lot from this session as well. So who we are, some background, some brief introduction about me first. So I live in Sydney with my family. I like to play cricket and table tennis. Uh, so I'm in Sydney since last 4 years, and many of you might know me. I'm not a new name in the dynamics world. I am in the industry since last 15, 16 years almost. My most of the career was initially it was in Island Affairs, Mumbai and Gurgaon, Gurugram, and after that it was Ignify, Hitachi, and in Australia it was more in Breville. It is one of the company in Australia, and recently I was in Microsoft as well. Right. So Anand, you wanna give your introduction?
Yeah, I'm from Gurgaon. I'm chartered accountant by profession. Since last 14 years, I'm in this profession. Though I'm not a core member of D365 team, but Satya gave me chance to be part of this book. So my role into this book was to elaborate the IFRS and IAS to the extent possible in a summarized way. And my experience is basically consultancy in taxation and accountancy field.
Yeah. Thank you, Anand. So. Uh, those of you who don't know me and about me and Anand, so basically we are childhood friends. We have studied together in school and college, and even during our chartered accountancy. So it was really great experience to work with a school friend, childhood friend. Like we could not work together in um professionally in office because we just started our like different career altogether. I started into IT and he went to the core CA field. So it was a great opportunity, or like great feeling to come back again and work something together on a project. Right. So congratulations first of all to everyone who is here today, and maybe you are watching it on YouTube later on. Like you are investing 1 hour of your life listening to this conversation, listening to this discussion. I would say this is an investment. You're investing your time, and this will really should be beneficial to you, should pay some interest to you uh, in coming days. That's what I'm hoping. So how this and guys, feel free to interrupt, feel free to ask questions. Send a message, send the questions in the messages here. Rakesh and like the team here is the moderator. They can interrupt me, ask questions. Feel free to send messages. So it's very informal session. You can ask questions now. You can ask questions in the end. Feel free. So the agenda of today will be. So we'll start with some background, how this book emerged. So there's this story, small story behind that. So then we'll talk about some finance and accounting, like how these two things are different. Some concepts and convention of accounting. Again, these are the building blocks of accounting. Why most people are confused about debit and credit. IFRS and International Accounting Standard. So that's where Anand will also pitch in. And then in the end, we'll talk about the financial statement and few key ratios which everybody needs to understand. Right. So finance consultant don't understand finance. So this is a kind of a radical statement. This is a bit rude statement from me, but most of the time, not most of the time, but some of the times it happens. It happened actually 5-6 years back when we were interviewing some candidates for the finance role, and many people who working in finance, they don't really understand what is finance. Right. So what does it mean? Sorry, guys. Just a minute. So what does it mean? So when I interview people, I ask very basic questions, right? I don't really ask. I don't go deep into the like technicals of your finance. I start with basic. My understanding is, my thinking is, if you are strong in basics, you can do anything in life, right? So you know about basics of finance. It's not tough for you to do anything, right? So you can learn any system, you can learn any advanced concept of finance, but your basics should be very strong, right? So I generally ask accounting entries when I interview finance consultants. I ask a few finance terms which generally you hear from your clients, right? I ask about like financial statements or some accounting. When you sell the asset, you buy the inventory. When you sell the inventory, cost of goods sold, all those kind of things. I'm audible, guys. I thought there was some problem in between.
Yes, Satya.
Yes, Satya.
Yeah. So that was like something that happened 6 years back. So that was a bit surprising for me that time. Like people have the finance background, like they are chartered accountant, they are CPAs. Still, due to some reason, they start diverting from their area. They start forgetting about the basics, and think that, okay, if I start doing IT, I don't need to remember all those things, right? Which are like basics of finance. So that was the time I started. I thought I should be writing something about the basics, right? So everybody can understand, not only finance folks, even the non-finance, even the software engineers who are working in ERP, they can learn about accounting and finance, because there's a lot of content in the market, in the on the internet, but they know very structured content, right? You will not see everything at one place, right? So that was the whole objective, and that's how this book emerged, right? So I started writing it long back. I could not continue in between, and then I picked it up last year again. I finished it with the help of Anand, right? So, but there's no shame in saying I started it 5 years back. So it took really 5 years if you see the whole duration of the book. This is some brief about the book. Again, people who have read it, they know about what is covered in this. So I'll not go into detail here. Just a summary, it was published on 17th September, around two months back. It was self-published book. It means there was no publisher here. I published it myself through Amazon. It covers the basic, which I said before. In this book, you will find something for everyone. So when I say something for everyone, for beginners, for intermediate levels, people who are in D365 already, they will also find it useful. Who are new to D365, definitely they will be they will find it very useful because it will take you step by step in this journey. And there are some very rare content on IFRS and D365. Again, when I'm saying rare content, it's really rare. You won't see this kind of content which talks about IFRS plus D365 together and anywhere in the market. Last thing, but not the least, the profit of this book, we are donating 100% profit to the charity, right, which will be starting next month. Right, so going to the first topic here, what is the difference in accounting and finance? So again, many people take these two things as a synonym. People think this both are same things, and the reason of this confusion is because this overall in the bigger picture, it falls under the finance, right? There is a finance department, and accounting is one of them, right? And many people even don't understand that they think that everything is accounting, right, or everything is finance. So there is nothing wrong in saying that, but if we go in a little bit of technical, we can understand the difference um, by this analogy that accounting is about the past, what happened in the past, and finance is about the future. So what does it mean? Accounting is about recording the transactions, what has happened, right? So you traveled. So let's take an example of traveling. You travel for the project to, let's say, Mumbai, Delhi to Mumbai. Then you incur some expenses. You file your expense in let's say in D365, right? So that goes to the finance department after approval. So that is called accounting because you traveled in the past. You book your expense. So that's accounting. So that's all the transaction. That's called accounting, right? What is finance? Finance is about future. So it means it is predicting about the future depending on what you had done in past, all the transaction, all the last year results to last 10 years results. What can you say about next year results, right? For next year forecast, next year profit forecast or sales forecast, all those kind of budgeting. That is called finance, right? So that's the major difference in accounting and finance.
Satya, sorry to stop in between. Are you sharing something? Because I can see only one slide, which is finance consultant don't understand finance.
Oh, sorry. Really? That's why I was.
There you go. Now I can see top 5 accounting principles.
Oh, it didn't refresh. Okay.
Okay,
It's
perfect.
now.
Thank you. Thank you.
How's it now?
Yeah, now I can see top 5 accounting principle, right?
Yeah.
Okay,
So
perfect. Thank
if you
you.
missed the previous one, I was sharing this slide before this.
Okay.
Sorry, before this, I was sharing about this book. There was a snapshot of few key facts about the book.
So you want to just quickly repeat that point on slide number 6 so that attendees can understand the more detail about your book, maybe 2-3 minutes over there. Yeah, thank
Yeah,
you.
okay, yeah, sure. Let me do that. This book was released 2 months back on 17th September, and the main key things I want to highlight here for the people who want to be author, like I know many of us writing blogs nowadays, and that's the opportunity for people who write blogs, who are good in writing, who don't hesitate from writing, right? So I always encourage, like, especially after I have written a book now, I can say if you are already in that journey of writing, you can write blogs, you can also write the book, right? And so it's not a big thing. You just need a proper format structure of your book. You just need to talk to, like, your, let's say, your um, core team, like you, to people who you trust, engage with them. Okay, I want to write about this book. I want to write 10 chapters. This will be the section. This kind of structure you need to create. Then take that 10 chapters as just 10 blocks. You need to just write 10 blocks. Definitely there'll be bigger blocks, like 15, 10 pages, 15 page each block, or you can further subdivide it. But what I mean to say is it's just a series of blocks you need to compile together, stitch together. That becomes your book. So, so I was talking about this self-publishing model. You can Google about this. My point was, if you are on this journey of writing, I will encourage everyone to write a book. Like, that's a different kind of experience. Rakesh, I know you are you also good in writing. You keep on writing blogs, so definitely I'll encourage you to also author some book next year.
Yeah, Satya, inspired by you and Anand. Trust me, I already started some activity.
Oh, really?
Yeah.
No, looking forward to what you write. Good.
Thank you, Satya. Thank you.
So yeah, let me know if any of you want to take some help in, like, I can guide you what are the steps needed, what will be the challenges, right? And where you can do some planning, prior planning that will help you. Okay. So I took 5 years to write the book. So it doesn't mean I was writing for 5 years, but there was like very up and down in the journey, right? I engaged with 4 other authors before Anand came in the picture. There were 4 other authors, right, who came in and then dropped, right? So they were so that was the whole journey. So you should be writing what you are good at, like people know you for that kind of content, that kind of, let's say, Rakesh, you are known for your solution architect in D365, right? Or so anything you write on technical subject, that will be like people will be interested in, right? That will add a lot of value to the community, right? And people will say, yes, Rakesh knows about this, so definitely there should be something good in the book. Coming back to this book, this is about the basics. Again, if you are in D365 or want to know D365 accounting finance, then this is the book for you. This will take you step by step into from very basic to bit advanced level till IFRS and financial statement as well. And So this is the first part of the book. We are also writing now second part, which will be coming late December or early January, right? So we'll cover the project accounting, manufacturing, and a few more modules, and few more IFRS are covered there. Again, 100% of the profit of this book is going to the charity. So far we have collected around $3,000 to $4,000 from the sale of the book. So we'll be donating the whole money next month to one of the organization in Noida. They are into child education and welfare. Um, So yeah, we already talk about this accounting and finance. What's the difference in these two concepts? I'll move on from here. Again, people who are not from finance background, they will find it useful. This 5 accounting principles. Right, so I will very quickly cover these for you. Right, people who know finance, they will find it very basic because this is the thing what they teach in schools. Right, very first year you learn the accounting, right? So first thing is the dual aspect concept. Every accounting concept or accounting entry has a dual aspect, like there is one debit, one credit, or something comes in, something goes out, right? There is a profit, there's a loss, right? So every transaction has two aspects. So that's the first concept. Second concept is accrual concept. Right, so things nowadays we follow the accrual accounting, which is different from cash accounting. It means uh, you book your expenses. One of the example is the expense. You book your expense even if you have not received the invoice. Let's say your electricity bill. Simple example. Electricity bill comes to you on 7th of January, right? So it doesn't mean you will not book your expenses for December. On 31st of December, when you close your books, you need to calculate or estimate how much will be my expense for electricity in December. So that amount you need to accrue in your books, right? So that's called accrual accounting. Going concern concept is about uh, uh, the approach where you say my organization is a long-term, is a going concern. It's not a gone concern. It means I'll continue this business for next 50 years or 100 years, right? I never assume that my business will be closed next year, right? And that's why there is a concept of depreciation, right? If I buy a machine or a computer or any furniture, I start depreciating it, assuming it will be used for 4 years, 5 years, 10 years, depending on the useful life. If I assume that my business will be closed next year, then I'll be depreciating the whole set in the same year, right? So again, that's a basic concept of assumption or the convention of accounting, that you should assume your business is long run, unless you are into a special purpose vehicle. Your business came into the being just for a special project, that there's a little metro is building metro project, right? The metro will be finished in next 2 years. After that, that's it. The company will be sold or closed, right? So that's a different thing. Those are exceptions. Next is consistency concept. Consistency is about keeping the consistency in accounting. Let's say you are following one accounting principle this year, you need to be consistent in that. You can't keep on changing your policies every year, right? You can change it, but again, that will be exception. You need to declare it, you need to disclose it in your financials, but you can't keep on doing it every year. So again, for example, this year you say, I want to follow FIFO method, right? First in, first out. Next year you say, I want to follow average. Then third year you again say, no, I'll go back to FIFO. You can't do that, right? Last is the conservation concept. Conservation concept is we follow the conservative approach in accounting. What does it mean? We always book or record all our expected losses or expenses, but we don't account for expected profit in the future. It means, so it is very similar to the second concept, accrual concept, that I know next year some of my debtors, some of my assets, debtors, for example, will go bankrupt, right? So due to COVID or due to other situation in the market, some of the debtors may not return my money. So I create a bad debt provision for that. Like 5% of my debts will not be returned. That's called provisioning for bad debts. And the reason of that is the conservative principle or the conservation concept. Okay, so these are the concepts which runs in the background. Again, you will not see it day to day, but that's the very basic, the foundation. Okay, moving on. Again, I'll not go in detail of this debit and credit. What is debit, what is credit? It's not the topic that I can cover in 5 minutes. But this is detailed, very much detailed in the book. And that was the whole concept of the book when I started writing it. Like, I want people to understand the debit and credit, because that's the basic. If you get this, I think the whole accounting will be very easy for you. Okay, so generally the confusion for people are, people say, okay, what is credit? Credit, something that comes in the left side, that is credit. Debit, which comes on the right side, that's debit, right? So again, that's not true. Side doesn't matter. There's a logic behind what is debit or what is credit. Okay, second confusion is, sometimes you get the message from the bank, like you got the credit of $100, right? So what does it mean? Having credit from the bank means I am getting the money, or bank is charging something from me, right? So that's also the confusion. So just to clarify this thing, when bank gives credit to you, it doesn't mean credit always means like you are getting something. Whenever bank says something, bank is saying from bank's point of view. Okay, so when bank is giving you credit, from your point of view, it is debit. Your account is in your books, you will put it in the debit side, not in the credit side. Right? So when bank will say your account is being debited, it means they are deducting money from your account. When you write that transaction in your system, that will be in the credit side of the bank. Okay, so again, it is just a you need to see who is doing that accounting, other party or you. So you need to think from your point of view, right? So this will be totally opposite accounting when you think from other side and this side. When we go in debit credit concepts, you need to understand what there are types of accounts, right? Like personal accounts, real accounts, and nominal accounts. So personal accounts are basically the debtors and credits, all those parties and people you deal with in your business. You sell to some companies or people, you buy from some companies, right? Or other parties. Those are basically personal accounts. Real accounts are all those assets, buildings, furniture, or computers, and all those are basically real accounts. So both of these, personal and real, these accounts make your balance sheet, right? So assets come in the asset side, right? And debtors come in the side, creditors, or the liabilities come in the liability side. So that makes your whole balance sheet. Third type of accounts are nominal accounts, expense and revenue. So that's your profit and loss or income expenditure account. Okay, so all income expenditure or expense, revenue, profit loss, whatever you call it, Those are all nominal accounts. So depending on the type of account, there are two golden rules of accounting, like what will be debit or what will be credit in any transaction. You can apply any scenario, any situation. Everything fits into these two golden rules. Okay, so debit the increase in the asset. You can also see here, debit the increase in the asset. So whenever the asset is increasing, you will debit that. When the asset is decreasing, you will credit that account. Okay. So this rule is different in the case of liabilities. If the liabilities are increasing, you will credit the that account. If that it is decreasing, then you will debit the account. In case of, so that's a golden rule one. Second golden rule is about nominal accounts, right? All the profit and loss accounts. So there you debit all the expenses and losses and credit all the income and profit. Okay, again, you need to practice this, apply this in all the transaction, then you will get more understanding. Now, this concept has been explained in chapter 3 or 4 in the book, and same concept is there in the book in all further chapters, right? These golden rules are applied to all the D365 transaction as well. So for example, this is the sales order posting. So when you post a sales order, you get this kind of transaction in ERP, in system. So you debit the customer account, your AR account is debited, your sales account is credited, right? So what is customer account? That's a personal account. Sales account is nominal account, right? So because sales comes into your profit and loss account, that's a nominal. Customer is your personal, that's a balance sheet account. So golden rule 1 will apply to personal, golden rule 2 will apply to nominal. So the rule was, when your asset is increasing, you will debit that account. So when I sell something to customers, my customer balance will increase. So my asset is increasing. So I will debit the customer account in this case, right? So that's why this is debited. And so why this is credit? Because sales is my revenue. My revenue is increasing, then I will credit the revenue account. So again, so this is a beautiful linkage between D365 accounting or ERP accounting to golden rules of accounting. So this is something which you will not see anywhere in any book or any blog, right? So that's the I would say good linkage for the people who want to understand accounting of ERP. Feel free to ask me any question if you have now. Right, so this was about like whole basics of accounting and how this basics is linked to D365 accounting. This was one of the example. But again, so this was about the AR, right? Order to cash accounting. In the book, we started with the general ledger, procurement, order to cash, fixed assets, right? All those basic modules of supply chain are covered, and all the accounting are covered with the posting profile and with linkage to these golden rules. After that, there's a whole coverage of the International Accounting Standard or IFRS. So we have covered many of the IFRS in this book, and some of them will be covered in the next book as well. So there's a snapshot what is covered in this book. So so this is mentioned in this column here, book 1 or book 2. So book 1 means the book which has been released now, book 2 which is coming in January, right? So many of them are covered in book 1. So I will invite now Anand can explain, like he's the expert in IFRS, so better he talks about the IFRS and how we have tried to cover IFRS in this book.
Yeah, thank you, Satya. Yeah, as Satya just explained about the basic principles of the accounting, though these principles are as it is since decades, then why there was a need of these IAS or IFRS or accounting standards? People actually start using these accounting principles according to their choice. The way they account, the way they prepare the financial statements, it varies from country to country and from person to person. Because of that, the two financial statements were not comparable. So it emerged the need of releasing the standard to standardization of the financial statements and the presentation of the financial statements. If you talk about IAS and IFRS, these are the internationally accepted accounting principles and accounting standards. So in 1973, IASB were known as International Accounting Standard Committee, who used to release the accounting standards named as IAS, that is International Accounting Standards. And later on, it converts to IASB, International Accounting Standard Board, which nowadays is issuing the accounting standard named as IFRS. IAS, the main focus of IAS were on the principles of booking the transactions in books of account, but IFRS is more gives a more larger picture. These are international financial reporting standards. So it focus not only on recording of the transaction, but it give guidance how what all disclosure should be there in the financial statements. So the IFRS is now issued by IASB, and most of the countries, approximately 120 countries, have adopted now IFRS. Many countries have adopted IFRS by converging their domestic accounting standards into IFRS. They are not giving the name as IFRS. Like in India, we are using IAS, like Indian Accounting Standard. So those Indian accounting standard are at par with IFRS. If we prepare our books of accounts using IAS, then it is internationally acceptable financial accounts. So if any investor comes to India and he used to verify the books, then he may ask us to please provide us the books which is prepared on the basis of IFRS, and if not IFRS, Ind AS. So this is the story about why there was a need of IAS and IFRS. So IFRS, we can categorize IFRS on the basis of their nature. Some IFRS are mere presentational. They focus on how to present the financial statement, what all should be there in the financial statement, and what constitute a financial statement. What should it contains? Like it should contain the balance sheet, it should contain profit and loss account, it should contain cash flow statement, and the notes explaining the items covered in the financial statements. So these IFRS has give the investor total overview about the entity for which we are looking into. Before the IFRS era or accounting standard era, two financial statements were not comparable. Someone using cash basis of accounting, someone using accrual basis of accounting, and there may be chances their method of depreciation may be different. And because of all these things, two books were not comparable, two financial statements not comparable. We cannot judge the health of the company on the basis of financials if it lacks the principles of accounting or it lacks the disclosure requirements. So in current era, this FRS is taking care of all these things, and we are in a position to make apple to apple comparison of Indian financials with the any other financials which is prepared on the basis of these IFRS. So
Thank you.
okay, Satya.
Yeah, so that's a very good background of IFRS and like why we need IFRS. And IFRS doesn't mean every company follows IFRS. Many countries have adopted their own version of IFRS, but still they are called IFRS compliant. Still, you can say, okay, I can compare the results of like Indian companies to American companies, even if Indian companies are not following like strictly IFRS, but the Indian standards, which are called Ind AS, are converted according to IFRS. So
This is a converged accounting standard.
yeah, so which is still good. Every country is doing that, and there's a strong need of converting those as per IFRS. Moving on now. Again, now we are not talking about only the concepts here, not the IFRS only. We are trying to basically link these concepts to ERP as well. That's why we are here, right? So IFRS needs something. How ERP comply with that need, or how ERP can help you meeting those requirements. Again, if system is not helping you meeting all those compliance, CFO, you can't really impress any CFO in like when you go to meet the client, right? Like CFO, first question nowadays is like one of the question is like, is your system IFRS compliant, right? So so that's where many of like the consultants will not know, because they know yes or no answer. It's not 100% compliant. So and it's not like fully compliant. It's not even like zero compliant as well. So there is a kind of a matrix we have given in the book for each IFRS. You can see, okay, what exactly we meet in the system and how, right? So, for example, IS2, IS2 talks about the measurement of inventory. So talks about the inventory valuation and everything, right? So uh, it says cost should include all cost of purchase, cost of conversion, other costs, right? So when you purchase, like create a purchase order, you add the charges, or nowadays there is a landed cost module in ERP, right? So all that takes care of your inventory value. You load the cost to the item item value, right? So now this is very basic. Like since that day you started learning ERP, you know, yeah, this is being done. But this was the requirement of IAS, that your inventory should be valued uh, like this. All the cost which is incurred till the inventory reaches to your warehouse should be added to the that cost of the item, right? So all the freight, all insurance, and that's why recently this landed cost module was introduced in D365. So now we can say yes, our ERP is compliant by using landed cost module, right? Valuation method. How many valuation methods are allowed as per ERP? Sorry, as per IFRS. So IFRS says LIFO or LIFO is not allowed. You cannot have a LIFO method in your business, right? So even ERP allows all those. Technically is possible, but when as a consultant you go and you are presenting about, let's say, valuation method, and before anybody says, you will say, okay, we support this method, like there are 5-6 methods are supported by ERP, but I know LIFO is not allowed as per IFRS. So as soon as the client will hear that, they'll be impressed by your knowledge, right? They'll say, you know a lot about accounting as well, not about ERP only. So these are the basically punchline you should be using as a consultant when you go out. Third thing, expense recognition. When inventories are sold, revenue is recognized is P&L, right? There is a write down of inventory to NRV or net realizable value or inventory loss. Again, this is not something new. You know all that, and how ERP is handling it by cost of goods sold, right? So when you sell a when you post a sales transaction, cost of good sold (COGS) transaction is automatic in the background. When there was no ERP, this transaction was not easy at all. There was a month-end process to calculate the cost of goods sold. Okay, another example is the effect of change in the foreign exchange rate that is covered under International Accounting Standard 21, IS 21. I'll not go in detail just in the interest of time now. One requirement is all the assets and liabilities should be converted or should be translated using the current exchange rate. If let's say there is a foreign currency transaction or foreign currency balances in your books, so there is a predefined or there's a prescription from IFRS that you should be using these kind of exchange rate, current exchange rate which is going on now, historical rate or monthly average rate. So that's why if you remember on chart of account there is a exchange rate field, like this particular account should be translated using this rate, so you can define there. So this was the requirement for IFRS, and how ERP is meeting that is that's the setup on the chart of account. So that's also the linkage is given in the book. Okay, so most popular IS or IFRS, what you will see more often is IS2, IS21, which we talked about just now before this, about fixed assets, property, plant, and equipment. So these are the exactly names of those IFRS, what is given from the IFRS body, right? So we call fixed asset module in our system. This is about the grants, right? And we handle it through the project module. Revenue from contracts with customer, we handle it through revenue recognition module. Again, this is also a comparatively new module of system. Lease accounting, this is a brand new module again, like many of you know that, like landed cost, this is also very recent. Moving on, after IFRS, last section of the book talks about the financial statement. Financial statement, again, this is the end objective of the accounting. Accounting has to, like everything should boil down to trial balance and then financial statement. If you're new to finance or accounting, and again, when you talk to the client, CFOs, this thing should be on your tips. So, you know, these four are the major, like most common, or I think these are the main financial statement. Every company has to have balance sheet, income statement, cash flow, and equity statement. Few points which I just want to highlight, just concept wise. So this is one of the format of income statement or profit and loss. Will not go in each section. Just one definition I want to clarify. You must have heard the word top line and bottom line. So what does top line means? It is just nothing but the gross sales. So when someone asks you what is a top line, so it means he's asking about the sales. How much is the sales, right? What is the bottom line? How much is the profit, right? So some people say, okay, like top line doesn't matter, bottom line matters. It means sales doesn't matter. How much is the profit? Tell me that. Okay. And there is one very important term is EBIT. This is called EBITDA, which is basically earning before income tax, depreciation, and amortization. Right. This is the value. This is the profit percentage generally people use when they compare two companies, like what is your EBITDA, what is your EBITDA. Okay, like if it is more than 15, which is good, right? So for comparison, generally people use EBITDA instead of net earning. Similarly, from balance sheet, again, I want to clarify here, the format of balance sheet or profit loss doesn't matter at all. Every country, every company can have its own format. Definitely there are some rules, but you will see sometimes there's a T format, sometimes there's a this particular format, like you put the assets on the top and the liabilities in the bottom, and there is a net balance of net equity. here, after the IFRS came in the picture, there was a requirement to classify everything into short-term and long-term, right? Short-term debt, long-term debt, short-term investment, long-term investment. So everything you will see nowadays, it will be classified like that, right? And there will be termed shareholder equity, which is basically the difference of all the assets and whole liability. That's it. Remaining is the shareholder equity, which is basically the money of the shareholders, even if they are it's not distributed to them, but still they are the owner of that. Okay. Another thing you should be knowing, you should know when you go in finance is the ratio. There are many ratio. Most popular are the current ratio, current assets and current liabilities, debt to equity ratio, right? So, and there are many ratios. So those are also important thing when you analyze the company from investment point of view also. So there's something to you should be reading it. If you are into investing, you must have heard the PE ratio, like what is the PE of this company? Again, this is the most important ratio or the number nowadays the people use. So when I say PE is, this is the formula, the share price, the current market price of the share divided by EPS, earning per share. And this is the formula for earning per share. So let's say example here is PE ratio is 22. So the PE of that company is 22. So which came from $44 of that market price divided by earning per share. So now again, I'll not go in detail, but generally you must have heard if the PE ratio is less than 15 or 10, that company is good to invest. Right? It means that company is not overvalued. You can still invest. Its price might go up. Again, don't take as an investment advice. Just for the discussion, I'm saying that. So that depends on industry to industry. Some industry PE of 15 might be good. In other companies might not be good. Like that, maybe 10 or 7 is good in those industries. Okay. This is the format for cash flow. I'll not talk about that. Cash flow in general is about like how much is the cash flow. Even if you have good profit, it might not mean you have the good cash flow as well. So from investment point of view, companies who have good cash flow every year, increasing cash flow year by year, those are considered good. Those are considered solid companies. Right. So that brings me to the conclusion of my presentation. If you have any question, we have 5-7 minutes. We can discuss now.
Thank you so much, Satya. I would like to have a big shout out to all our attendees. In case if you want to ask any questions directly to Satya, you can even raise your hand and we'll unmute you.
You can ask if you have read the book, about the book or planning to buy the book. You can ask about the book. You can ask about anything we have discussed so far. You can talk about anything. So that's fine if you you don't want to ask any question, that's also fine.
Satya, I do have a last question for you and Anand. This is Rakesh here, Satya. Is there any vision for e-book? Because currently we do have only a hard copy, right? So any thought on this, Satya?
Yeah, that's a good question, and many people have asked for the e-book. The only reason we were not releasing the e-book was so we are working on our next project. That is the second part of the book. Also, we are working on, there's a kind of news, not many people know that yet. We are working with one of the publisher for similar book on SAP side as well.
Okay.
So there was a kind of restriction so far that no book will be released, but I think we can start doing it in January as well.
Yeah,
Very
because I have received a couple of requests, Satya, based on our earlier discussion, right, and the understanding that I have got from your book. And there were a couple of suggestions. One of the suggestion when I approached them, they saying, why don't you ask Satya to release at least a copy of Kindle, because that way he can secure his content, piracy and everything. Look at from a ebook
Yeah,
perspective.
no, that's right. That's right. No, so we consider all that, and we'll be doing it definitely. Definitely is coming
Thank
in
you. Thank you,
latest on.
Satya. Thank you.
No, very good and good to have it as a reminder as well, because we started doing the next project now, and this is kind of on the back burner. But definitely it'll be there. Thank you.
Yeah, because this book is really a good foundation for those who
Hmm.
are not from an engineering background and started working as a technical, right? Because often you have seen now the product that is Dynamics AX and FNO, day by day is changing, right? It's moving to a cloud and a true SaaS product, more and
Hmm.
more focus. If you look at the implementation strategy also, right? Customer and Microsoft Fast Track team also focusing and guiding customer that not to go for a customization, stick to the product, right? So that is where I also seen that in many implementation, technical folks try to understand the concept. Okay, probably they would understand how that functionality works, looking at the blogs and the docs.microsoft.com. But basic fundamentals remain the same, isn't it so? So I think that is where your book and Anand's book is really going to be a big foundation. And I have seen many folks raise a concern. Why don't you have the copy, whether it's ebook and Kindle? I'm sure. I mean, you should. I'm sure you must have thought process. You must have initiated that. But I think I would request you to try to expedite that. Nothing more than.
Yeah. No. Yeah.
Thank you, Satya.
That's correct. And it's good point that like technology's advancement is so fast right now, and everybody's talking about all the advanced thing, right? So
Yeah.
I thought like writing books like this may
Mhm.
not sound good, may not sell well,
Yeah.
because everybody talks about power platform in our industry nowadays, right?
That's that's correct. That's correct.
Machine
That is
learning,
that is
right?
what the buzzword nowadays, right?
So I thought like talking about debit credit, does it sound interesting now or?
I think it does, Satya, it does. And let me tell you very frankly, I read the entire book, right? I know I still owe to that end-to-end detail review. I'll do that because of this lot of stuff I could not get time, but I'll do next at least I'll commit that 2 or 3 weeks of time. But one more suggestion, Satya, from my end, that if you're planning to have a second edition, okay,
Mhm.
I would request the way Microsoft is focusing on FNO or finance piece, right? More and more they're trying to focus on AI and machine learning and some sort of financial insights, right? So if someone from a functional background, core functional background of finance or a
Hmm.
technical, right? For them, it is just a technology which is enablement for them and customer to execute set of processes. Take an example of cash flow, right? How the cash flow and flow forecasting
Cash flow
happens, right?
forecast,
So
new
maybe
concept
if
of, yeah.
you and Anand can thought through for in your second edition
Hmm.
and help team and attendees or community to understand before you move on to that space of AI and machine learning from a financial perspective, you need to stick to a basic of a reporting concept, right? Typically in accounting term, we call as management accounting. We talked about trial balance, we talked about balance sheet. When there's a complexity involved where multiple subsidiaries involved, right? And that is where the challenge comes into picture. How I'm going to do the consolidation from a reconciliation perspective from a balance sheet. So whole bunch of that reporting aspect and
Hmm.
how you can tie up together with the AI and machine learning. I think that is going to be really beneficial to all of us, Satya.
Good suggestion, very good suggestion. I think, yeah, I might delay the launch now, then I will take more time.
Okay.
This will definitely take time. No, no, but that's a really good suggestion. Very value added, I think,
Yeah.
the content. Yeah,
Okay. Thank you.
thank
Thank
you.
you.
Yes, Satya, thank you so much for those insights. I must say that was a really great session from you. And I'm sure for most of us, the basic accounting principles have now been cleared. like the golden rule of debit and credit. I think that's the most common rule which for accounting person is being taught at the start of his education, and the concepts for the IFRS and the default balance sheet. I could easily correlate with this information actually, Satya, because even though I'm a core technical, but my educational background is accounting, so that was an advantage for me. And yes, and as you mentioned, you are even going to go for release of the next book. So we are eagerly looking forward for your next book release, and we have definitely taken a lot of learning from here. And now I'm really sure that the young talent that we have in market, they will definitely, it will help them in to start their career in financial ERP. So thank you so much, Satya and Anand, for that informative session.
Thank you very much for having us here.
So before we go ahead and conclude for now, Satya, I would like to tell you one story. Probably you can correlate, and I'm sure you and Anand must have thought through when you wrote a book. So when I started the educational background, right from the MBA and the core accounting principle, I was one of our professor. He was an excellent guy in that accounting principle. You give any question to him with be it financial accounting, cost accounting, or management accounting, he will give you the core concept in a few seconds of time. So when we started learning the concept of bookkeeping, right, with the initial stage of the education background, we used to always confuse. Then he told one story, because before he came into this professional background, he was playing a role of one of the bank in India. So he's saying that he also got fumbled in the initial his days when he started in accounting, and he told a story that he used to refer annotation in his underneath of table. Left hand side is a debit, right hand side is a credit. So whenever the person comes in to deposit a cash into a bank, being he's a cashier, and the withdraw the cash, he used to look into, okay, which one is debit, which one is credit, right? And that is how we used to have a fun to understand the concept. So when you were trying to explain, right, the 5 golden rules, and one of the golden rule is a debit and credit, right? I could correlate that conversation, though it is 21 years ago, but I could go into my back of memory lane and just try to understand, right, what was, and this is how the core concept, right? If you look at currently when you spoke to financial consultant from a customer, or maybe any IFRS person, right? It is very much required indeed, right?
Exactly. And people just try to jump to the advanced concept without like going into these basics. So that's the problem, right nowadays.
But to be honest with you, when I started my career in ERP, I also follow the same fund, debit and credit. Left hand side. Okay. Thank you. Thanks a lot, Satya.
Thank you so much, Satya.
Thank you.